Hi, welcome back to Joe Blogs. In this episode, I want to provide you with an update on what's happening in the Russian economy. And before anybody gets very excited and starts saying that this is all propaganda and that I'm making up all of these figures, the figures that we'll be going through in today's video have been provided by the Ministry of Finance from Russia. So these are the official figures that have been published by the Kremlin. Now, if you've been following the channel, you'll know that the results for January and February from Russia were very poor. And I'll give you the heads up spoiler alert right now that the figures for the end of Q1, so including March, are still very bad. So in today's episode, we'll have a detailed look at what's happening with oil and gas income, how it compares to this time last year, and what the first quarter equates to in terms of the full year forecast for 2023. We'll have a look at what's happening with non-oil and gas revenues, VAT, income tax, expenses, and once again, heads up spoiler alert here, Russia is spending a lot more than it did this time last year and is well ahead of its full year budget. And then finally, we'll have a look at what the net deficit is for the first quarter and what this means in terms of the full year outcome for 2023. And once we've been through all of those figures, I'll give you my summary as to what I think is happening in the Russian economy and what's likely to happen over the course of the next 3 to 6 months. This press release, entitled Preliminary Assessment of the Execution of the Federal Budget for January to March 2023, is the official press release from the Ministry of Finance in Russia. And if you want to look this up yourself, you can find it at minfin.gov.ru. This table is as much detail as we've been given and provides us with a summary of the results for the 3 months from January to March 2023. We also have a comparison against the same period from 2022. We've then got a percentage showing whether or not the current results are higher or lower than last year. And then the final column here is the full year budget for the whole of 2023. All of the figures shown here are quoted in billions of Russian rubles, and the exchange rate currently between the Russian ruble and the US dollar is around 82 rubles for $1. And that's really interesting in itself because this time last month, when we were talking about the figures to the end of February, the exchange rate was 75 rubles to $1. So there's been a significant deterioration in value over the course of the last month. And in fact, over the course of the last 6 months, we've seen the ruble crashing in value. And if you're interested in finding out more details on that, check out the recent video I posted on the Russian ruble. Now, if you've been following the channel, you'll know that the Ground News app has been a really useful source of information when hunting around for interesting stories to report upon. And one really useful feature of the Ground News app is that when you're looking at stories, you can see whether they are reporting from the left or the right or the centre. And that's been really critical when looking on stories on Russia's invasion of Ukraine. Another feature that I really like is that you can check out the ownership of the news articles themselves. So looking at these articles on the Russian ruble, you can see that Al Jazeera is owned by the Qatari government, Zit Online is a media conglomerate based in Germany, and BBC News is partially owned by the government of the United Kingdom. Another great feature is that you can check out the level of factuality of these news sources. So you can see that all 3 of the news sources that I'm looking at here have a high level of factuality. So go to ground.news/Joe Blogs to access full transparency on where your news is coming from. Check it out for free or subscribe before April the 24th to get 30% off unlimited access. So let's start off by looking at what's happened to Russia's income. The income line across the top of this chart is total income. And as you can see, total income in the 3 months ended March 23 was 5.7 trillion rubles, which equates to around $69 billion. And as you can see from the table, that compares to around 7.2 trillion rubles, or around $87 billion for the same period in 2022. And that represents a fall of around 21% year on year. Now, the figure on the far right-hand side shows the total budgeted income for the whole of 2023. And as you can see, it's forecast to be 26.1 trillion rubles, which equates to around $318 billion. So in order for Russia to be on track to hit that figure for the whole of 2023, They should have achieved around $80 billion of income in the first quarter. However, they've only achieved $69 billion. So that represents a shortfall of $11 billion in the quarter. And if you're breaking it down on a monthly basis, Russia needs to earn around $27 billion of income every single month to hit that full year figure. However, in the first 3 months of the year, they've only been hitting an average of $23 billion. Now, in terms of how the income is actually broken down, the way that the figures have been presented to us by TASS is that we've got a split out here for oil and gas income and then non-oil and gas revenues. Now, you may have expected oil and gas income to actually represent the largest part of the income total. However, as you can see from the way these figures have been presented, the oil and gas income equates to around 30% of total income, and non-oil and gas revenues equates to 70%. And that seems counterintuitive when you look at it at face value, because everybody's been talking about oil and gas being the mainstay of the Russian economy. And there is a good explanation for this. The way this table has been broken down, the oil and gas income quoted here is the direct income due to the Russian state from its ownership in all of the oil and gas companies. So this is the direct revenue that it's receiving as part of its shareholdings. The non-oil and gas revenues relate to the tax income that the state is earning from all of the rest of the businesses. So basically, if Russia owns a 10 or 20 or 30% direct stake in a company such as Gazprom, which is selling gas to Russia and all around the world, the direct revenue from that shareholding is shown in the oil and gas income. And then all of the tax that it then charges against Gazprom for the other part of its business, which is not owned by the state, is then passed through in the non-oil and gas revenue. So the majority of the non-oil and gas revenue actually does relate to the oil and gas industry. It's just that it's being quoted as tax against those companies rather than direct income received as part of the ownership of those businesses. So let's now have a look at the oil and gas income in more detail. Total direct income from oil and gas in the 3 months ended March 23 was 1.6 trillion rubles, or around $20 billion. And that compares to income of just under 3 trillion, or around $36 billion, for the same period in 2022. So that represents a shortfall of 45% in the first quarter of this year. And if we look at the full year budgeted figure, Russia is expecting to earn 8.9 trillion rubles, or around $109 billion for the full year of 2023 from oil and gas income. And that means that Russia is budgeting to earn around $27 billion per quarter, compared to the $20 billion that it achieved in Q1 of 23. So a significant shortfall against where the Russian state was expecting to be at this point in the financial year. If we now have a look at the non-oil and gas revenues, which, as I mentioned earlier, relates predominantly to tax that the Russian authorities are receiving, you can see that in the first quarter of 23, total income was 4 trillion rubles, which equates to around $49 billion. And this compares to the figure from 2022 of 4.2 trillion rubles, or around $51 billion. So that represents a shortfall of around 4% in the quarter. And if we look at the full year budgeted figure, Russia is expecting to earn 17.2 trillion rubles from non-oil and gas revenues, which equates to around $210 billion, which on a quarterly basis breaks down to around $52 billion per year. So in relative terms, Russia is doing quite well in terms of its non-oil and gas revenues, which is slightly surprising because the oil and gas income is down significantly, almost 50% down year on year, and is significantly below the full year budgeted figure. However, the tax from the oil and gas businesses and other businesses is basically on track, which at face value looks a little bit confusing because the majority of Russia's income is derived from oil and gas. And as they're so far behind in terms of their direct income from oil and gas, it's really quite surprising that the tax revenues relating to oil and gas businesses are basically there or thereabouts in terms of what they'd budgeted. If we now move on to look at the income from VAT, and the Finance Ministry is quoting this as tax on production and import goods, you can see that in the quarter, the actual figure was 2.7 trillion rubles, which equates to around $33 billion. And remarkably, that's exactly the same as the figure from 2022, which is very surprising because when you look at the other figures in this table, the oil and gas income is down by 45%, and the non-oil and gas revenues are down by 3.5% against the period from 2022. So it does seem very strange that the tax on all of the income that's being generated in the Russian economy is exactly the same as it was this time last year, despite the fact that all of the other metrics are significantly lower. And when you look at the full year budget for VAT for 2023, Russia is budgeting to receive 10.4 trillion rubles, which equates to around $127 billion. And if you split that out on a quarterly basis, that equates to around $32 billion per quarter. So actually, on a full year basis, Russia is running ahead of budget. It's actually received more income through VAT than it's budgeting for the whole year, which once again does seem a little bit surprising and does seem a bit confusing when you look at the other income figures, which are all significantly lower than they were this time last year. And if we now look at the income tax figures, the total income tax in the first quarter was 340 billion rubles, which equates to around $4 billion. And that compares to 435 billion rubles in 2022, which equates to around $5.3 billion, and represents a shortfall of around 22% year on year. And the full year budget for income tax for 2023 is 1.6 trillion rubles, which equates to around $20 billion, which breaks down to around $5 billion per quarter. So the actual figure for the first quarter of $4 billion is running around 25% below where the full year budget needs to be. So the figures for income tax are broadly in line with what we would have expected, given the fact that all of the other income lines are significantly below this time last year and below budget. And again, makes it even more puzzling that the VAT figures are exactly in line with last year and actually are ahead of budget after the first quarter of the financial year. In terms of expenses, the actual expenses incurred in the first quarter of 23 were just over 8 trillion rubles, which equates to around $99 billion. And this compares to the figure of 6 trillion rubles for 2022, or around $73 billion, and represents an overspend of around 34% in the first 3 months of this year. Now, if we look at the budgeted figure for the full year of 2023, it's coming in at 29 trillion rubles, which equates to around $350 billion. And if you break that down per quarter, that would equate to $89 billion per quarter. So the actual spend in the first 3 months of 23 of $98 billion is a significant overspend and means that Russia is going to have to cut back significantly on its spending if it's going to come in anywhere near the budgeted figure of $350 billion for the full year of 2023. And of course, one of the main reasons for this increase in expenditure is because of the investment in the war in Ukraine. Russia is spending a significant amount on defence and military spending right now, and that spending is likely to continue for as long as the war in Ukraine goes on. And as it stands right now at the time of making this video, there is absolutely no end in sight in terms of that conflict. I've talked about this before in other videos, but when Russia invaded Chechnya, that war actually went on for more than 9 years. So there is a possibility here that we could see a very prolonged conflict in Ukraine, which results in a huge cash drain on the Russian economy and could result in many years of deficits. Now, we've actually got some detail on the level of state procurements, and you can see that in the first quarter, Russia's total spending on state procurements was 2.5 trillion rubles, which equates to around $31 billion. And that compares to the figure from last year of just over 1 trillion rubles, or around $13 billion. So that means that the spending on state procurements in the first quarter of 2023 was over 50% higher than it was in 2022. And if we look at the budgeted full year figure for 2023 of 5 trillion rubles, which equates to around $61 billion, Russia has basically spent 50% of its full year budget in the first 3 months of the year. So this indicates that it's very likely that Russia is going to significantly blow through that budget and spend a lot more than it was originally planning to do. So in terms of the bottom line for the Russian economy for the first quarter of 2023, the net deficit was 2.4 trillion rubles, which equates to around $29.3 billion. And when you compare that deficit to the position from last year, when Russia actually returned a profit of 1.1 trillion rubles, or around $14 billion, that represents a negative turnaround of around $43 billion year on year. So this time last year, Russia was in profit and had a very healthy economy. Right now, it's in massive deficit and things are looking very bad. And if we now look at the full year budgeted position, Russia is expecting to return a full year deficit for 2023 of 2.9 trillion rubles, which equates to around $36 billion. So the year-to-date loss for the first 3 months of $29 billion represents around 83% of the total full-year loss. So Russia is going to have to do significantly better in the last 9 months of the year if it's going to come in anywhere near the budgeted deficit that it forecast at the start of this financial year. So what's the summary and conclusion today? Well, I wanted to post this video to give you the latest update on what's happening in the Russian economy. And as I mentioned at the beginning of the video, these figures have been provided by the Ministry of Finance from Russia. They're not my estimates. I'm not trying to make up figures to try to make Russia look bad. I'm just reporting on the actual figures that have been posted officially by Russia. And as you've seen from today's video, the actual figures for the first 3 months of 2023 are significantly worse than the period from 2022 and also represent a significant shortfall against the estimated full year budget for 2023. Now, obviously, the main driver of the shortfall in terms of income has been what's been happening with regards to oil and gas income. If you've been following the channel, you'll be fully aware that Russia is currently subject to a variety of sanctions from most countries from the West. And over the course of the last 4 or 5 months, those sanctions have been ramping up. On December the 5th, the European Union introduced an outright ban on the purchase of all Russian oil transported over the sea. And alongside that ban, the G7 also introduced a price cap on the sale of all Russian oil, which was set at $60 per barrel. Now, in addition to those two sanctions, on the 5th of February, the European Union also introduced an outright ban on the purchase of all Russian refined products. So this is gasoline, diesel, kerosene, anything that's been through the refinery process. And alongside that ban, the G7 also introduced a price cap on refined products. So the effect of those bans and price caps are really starting to hurt the Russian oil industry. And this is obviously on top of what's been happening in the gas industry. Russia historically was the main supplier of natural gas directly into Europe. It had built pipelines all across the European continent and was supplying large volumes of gas. However, since its invasion of Ukraine, most countries in Europe have decided that they don't want to continue with those purchases, and we've seen the volume of gas drop dramatically, and that's having a big impact on the Russian economy. So the cumulative impact of all of these sanctions is now really starting to hurt the Russian economy. And we can see in the figures that we've been through today, the direct impact in terms of the 45% fall in oil and gas income. And that's also feeding through into other income. As we discussed earlier in the video, it does seem a little bit peculiar that the VAT figures are exactly in line with the figures from 2022 and are actually ahead of budget for this year. But putting that question to one side, the bottom line for Russia in the first 3 months of 2023 is that they are running a significant deficit. That deficit compares to a profit from this time last year. And if Russia continues making losses at the current rate, its full year outturn for 2023 will be significantly worse than the Russian authorities were budgeting. Now, as we've discussed in other videos, Russia does have significant reserves. At the start of the war in Ukraine, it actually had around $300 billion worth of assets located overseas. All of those assets have been seized and are frozen, so Russia doesn't have any access to that. But in addition to those assets, it also was sitting on around $150 billion of cash in its national wealth fund. Now, in the full year 2022, the Russian economy actually incurred a deficit of around $48 billion, and that deficit was funded using the national wealth fund. And as we've seen in today's video, in the first 3 months of 2023, the Russian economy has lost an additional $29 billion. So what that means is that since the start of the war in Ukraine, Russia has recorded losses of around $77 billion. So that equates to around 50% of the $150 billion that was sitting in the National Wealth Fund. And if Russia continues to make losses at the current rate, there is a very real possibility that the Russian state will run out of cash before the end of 2023. And I have made some other videos on this. One of the Russian oligarchs, who's very close to President Putin, has actually come out and stated this, that Russia could run out of cash before the end of 2023 unless it does something about the current situation. So the position right now from Russia's perspective is really critical. They're making huge losses. They've lost a lot of business in terms of all of the sanctions. They are trying to replace that business by doing more trade with countries like India and China. However, the problem that they're encountering is that the price that they're achieving for those oil sales is significantly less than the current market rates. And that's therefore having a knock-on impact in terms of the taxes and all of the income that the Russian state is earning. So this is a critical situation from Russia's perspective, and they really need to turn things around over the course of the next 3 to 6 months if they're going to avoid an absolute disaster and a complete crisis in the Russian economy. So I'll keep you posted on any further news and developments on this story. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to leave you with a smile on your face.